Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, August 21st, 2020. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Here's a look at the ES in the daily time frame here. One thing you'll notice is that price has continued to trade mostly sideways. It's never really broken out from the range. It looked and appeared as though it was beginning to break out here with a potential continuation the next day, but instead fell into the range after the FOMC meeting minutes came out and has been back in the range. So if we quantify this range here, and again we're grabbing from here over to the right, that's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 days. We can just take the 10-day range by double clicking here. Let's select the tool right there. And then over here, instead of doing 11 days, we'll do 10 because the 10-day range is already in. 11 days is currently developing. And you can see right here that we are compressed down here. And that compression right there is against the average, and it is very, very narrow. I mean, the ES right here has a full and total range of 76.25 points over the last 10 days. That is significantly narrow, and we haven't found directional conviction or a breakout from this range yet. As soon as we do, the range expansion will be about 161 points once that breakout occurs, based off of 125% of average range. So again, using our PivotBoss advanced ADR tools here, we can clearly quantify that a ton of energy is being built up here, and we could see the next major move ahead. Now, based on the overall trend, this has tended to break out to the upside. For example, over here, breaking down first a little bit and then going to the upside. That was after a period of compression here. You can see the signal on a 10-day basis there, and then we got going. Over here, another 10-day compression. We can see it back here. It broke to the upside as well. So if we see some sort of weakness here, maybe something that takes us toward 3,300, but by the end of the day there's a rejection, that could be the beginning of what takes us higher into 3,500. So right now, we could see a ton of movement here ahead. But one level to keep in mind also is if there is a failure here to hold after a breakdown, that could open the way back down toward the FOMC key level below and perhaps lower. So right now, a ton of energy being built up, and we'll continue to watch this range. Let's take a look now at the NQ. Now the NQ has had a ton of conviction to the upside. It hasn't had sideways price action. Instead, this thing has continued to push higher. We did have a little bit of compression here, which we talked about, and we've seen that materialize to the upside. Over here yesterday, a failed new low, got a break below 2-day lows, and a bullish outside day. That is something we talked about in the pre-market video yesterday. If price is able to reestablish here and push through the previous mid, you start to attack the previous high and become a bullish outside day. That's what's happened here so far, which means any pullback could be a buying opportunity after the morning pullback for a continuation higher. If you look at the 60-minute developing charts right now for the ES and the NQ, which only need a few more minutes to fill, we have quite the rejection that has occurred in the 7 o'clock hour Central Time, and that strong rejection low could lead to a continuation higher back toward new highs, back toward the overnight highs, and then again through those highs. So again, keep an eye on the overnight low and the pre-market low rather, because again, if those lows hold for the ES and the NQ here, which are basically 11,400 for the NQ and 33.55 for the ES, failure to hold those levels could open up quite a bit more downside ahead. So any pullback for a higher low could be a great intraday buying opportunity, and we'll look at some of that here on an intraday basis in some pre-market videos going forward. Now, taking a look now at crude oil, you'll see with crude oil, this one has been in a range as well for quite a while. You can see down here the 10-period range is compressed. So we have compression in the ES and compression in crude oil, and again, not a whole lot of directional conviction here. It's been very, very difficult to gauge crude on a swing basis because we're not going anywhere. We're just going sideways. So really, Intraday trading is about waiting for the edges, waiting for the extreme events. Yesterday we had a very extreme sell-off, and after that sell-off, which was an hourly sell-off, we got the hourly reversal the very next hour, and we had that called in our trading room. So again, that extreme reversal played out, but it's about looking for the edges. Right now, we are right at the center of the range. We are not at a true edge for the day. You can see right here, this would be considered an edge out here. This would be considered an edge up here. And right now we're just right at the center of this zone. So not a whole lot to do at the moment from a swing perspective, but on an intraday basis here, if price can continue to hold above 42s today, that opens up perhaps a bounce back toward 43. But right here, that's basically been the range, 42 to 43 over the last couple of weeks. All right, let's take a look here at gold futures. Gold is basically hovering around the flat line for the day, but is doing so after rejecting two-day lows. This is significant. We talked in the previous pre-market video that gold needs to hold the 1920s, the 1920 to 1928 zone, and if it can do so, we could see a bounce that takes us back up toward 2025, maybe even higher if we break out through this range and take off. Ultimately, the key range that we've developed here gives us the framework and the targets moving forward. And so for the most part, we have an upward bias with major targets that come into play at 2196, call it 2200, and 2304, call it 2300. So at 2200 and 2300, the next major targets. And those are extension targets. Right now we're building energy. Two-day failed low right now. Any pullback into 1930 could offer an opportunity for a bounce that takes you back to 2021, perhaps onto the 2089 level, which is the previous high, and then down the road we may see further extensions that take us here. How much energy do we need to build before we make that trip? Who knows? But right now, this is looking really solid, especially from a bullish perspective, to have two-day lows taken out, a solid rejection, and taking out the previous day's midpoint. That's very bullish here on an intraday basis for gold with an upward bias. Again, we could drop as deep as 1930 to 1935 and still be a good buy for perhaps a bounce back toward 2020. All right, that's it for now. We'll see how this plays out heading into the weekend. Good luck. Trade well. Happy Friday. Please be sure to like, share, and subscribe. And I will see you in the PivotBoss EchoFin trading room. Take care, and I'll see you soon.